But I get a lot of questions by way of posts that you don't see in my comments on my YouTube channel because the majority of them are held because there's a lot of garbage being promoted, crypto this and crypto that and scammers and whatnot, and a lot of people pretending to be. It's far easier for me to just read your comments in private. And yes, I get an occasional troll or somebody saying something, that's, meant to tear me down, whatever. And it makes me smile. But largely, I get a lot of questions about, how do I pick certain PD arrays at the right time? And when I'm talking to you publicly, I'll call things into your attention, say, look at this, pay attention to that. Well, that's how I learned it. I learned it being prompted that way. Look here, look here, look here, look here. And not by somebody on the earth, but I had a helper inside, and that's who guided me. So what I like to do is find ways where I can closely bridge that gap. Now, I can't completely bridge it, obviously, because I have my own limitations as a man. But I strive over my life to come up with a language that hopefully could bridge the gap as close as I can for my children. So you all get to dabble in my life's work that I'm leaving for my children. Should I ever depart and leave them behind, they have a plethora, an entire library where dad's talking to them. And that connection you pick up on, you tap into that because it's sincere, it's genuine. It's not contrived, it's not made up, it's not trying to, make something that it isn't. It's genuine. My children watched me, build this entire, phenomenon, firsthand, walking in the home with me, seeing me, and working very hard to try to make a language to be able to communicate what these markets are actually reaching for, when they're reaching for them, what to expect, what not to expect, when not to do something. All these protocols and processes and procedures. And largely that goes untaught when you view classical analysis concepts. And when I say classical, I mean, for instance, Technical Analysis of the Financial Markets by John Murphy. Every trader on the planet should have that book, not because it's a good trading book. I fade 99% of the things in that book. I stand in front of the logic of what's in that book because it is specifically like a roadmap for retail logic and thinking. Now, I know some of you are stochastics traders, moving average crossover guys, pivot traders. You trade Elliott Wave, you got pitchforks, you got supply and demand. You got all the things that you subscribe to. I'm not here to bash any of that, okay? That's not what I'm trying to do. What I'm trying to do is challenge you in thinking about how some of the things I've shared should hopefully broaden your understanding about what price is actually trying to do. Because as I mentioned very facetiously over the years, many, many times, that with all the things that are available in trading in terms of analysis concepts, retail logic, people coming up with all kinds of little bells and whistles and indicators and whatnot, if the markets absolutely follow that stuff, the question I always pose to those who subscribe to that view, and I used to subscribe to that. Believe me, I started just like all of you that started with that stuff. At 20 years old, I believed that the stochastics and the RSI and the Williams percent R and the moving average, that was the keys to the kingdom. All I had to do is have the right settings, and it became a pursuit like the lottery numbers. I had to get the right numbers. And you fool yourself into thinking that you'll figure that part out eventually if you keep doing it. But it's a fool's errand, meaning that you keep trying to do something expecting a different result, but you go insane because you never reach that. You'll never reach that. There is no perfect settings because the market's always shifting and changing. It's changing its mode of volatility. It's changing the trend. It's changing its characteristic from a trending environment to a range bound where it's not really meant to be traded with a long-term hold position or a swing trader's perception. It's simply in a holding pattern, and it's grinding traders down because they want to pursue or participate in a prolonged trending market move. I started as a trader like that. I wanted to be a position trader. And I used a lot of the old school, still believed upon today. Everybody that comes in the marketplace today as a new trader invariably will come through one avenue or stream of some kind of retail stuff. And I'm of the belief that anything, even flipping a quarter, heads you buy, tails you're shorting, and then you have a filter of how many times you can take a trade and how often you can take a trade with only one instrument, that means one market, and one particular time where you can only operate in these specific hours. If you operate with a very strict, impeccable risk management model, I believe that can be profitable. And if you missed that, if it went over your head, you rewind the recording when it's available to you. Okay. Also, I almost forgot to mention this. I know there's a lot of you that take these recordings and you put them on your YouTube channel, and you have my blessing to do that. I don't care. But if you do it, I don't know what I'm doing on YouTube when I'm setting the settings for like apparently they've done something where my videos and other people that are YouTubers, you can listen to other languages, like I'm talking in a different language, but it's not my voice. I don't know how I'm doing that, if I'm doing it ever. I know I saw one video do that, but I don't know what I'm doing settings wise to do that. So if you're one that puts these types of Twitter spaces on your YouTube channel, leave the link underneath it and set it so anybody can listen to their language, because that's the biggest complaint I get. They want to listen to me talking live, like there's some kind of benefit to that. It's okay that you're not here live. It's still the same thing I'm talking, whether you listen to it 3 weeks from now or a year from now. The information is still good. It's pertinent. But I don't know. I don't know how to make those YouTube channels do that. So I'm not doing anything different when I set my settings on my YouTube channel. In fact, I just reuse the previous video's data. It has the risk disclaimers always in the description, and I just simply change the title. I'm not doing anything different, but some of my videos are doing it, and the majority of them don't. And it's not because I don't want you to have the ability to listen to me. I just don't know what I'm doing in regards to making it happen. So if you know how to do that and you can do it very short, post to me in X, that'd be wonderful. But I started with very rudimentary ideas, simply using a stochastic momentum indicator. It would tell me if I'm overbought or oversold. A moving average, 50-day moving average is a simple moving average at first, and I've shifted to an exponential because I thought it was more sensitive. And I learned over the years that really isn't all that important. I had moving averages for crossovers, and I trusted that as the trend. And as long as the moving average, 50-day moving average, and the 9 and 18 moving averages were, sloping up, or they call it stacking, then I had a buying opportunity. All I had to do was wait for a bullish divergence in stochastics. And I used the hourly chart to do that. And when the market is predisposed to go higher, that model still works today. It's very, very simple. But because I don't have an affinity for trading with indicators, and I know now because the market doesn't really follow that logic. And as I mentioned earlier, and I didn't get to the point because I got distracted by mentioning other things, the posing question that pops up, if I come into a conversation, or if I instigate a conversation, which I've done in the past regarding to retail logic, the question is this: if the markets are absolutely turning on a dime, timing their beginning and end on price runs, and they're doing it on the sole basis of retail concepts, it falls on its face on a logic stance, because all of the retail concepts do not agree. You see this misnomer where people have argued with me saying there is no algorithm, and I'm rebranding things. And now, because they're losing this war against me, now they're coming to this argument. They're saying, well, honestly, we're really all trading the same thing. If you really break it down, we're all trading the same thing. And I'm going to submit to you that is absolute lies, because all of these people that are saying that don't have precision entries. They don't have precision draws on liquidity where it turns to a dime. They are not telling you when it's going to occur. They have no respect or understanding of the element of time. They have no element of time understood in their analysis. Their element of time is I'm in front of the chart, so therefore it's time to trade. That's the logic that a gambler uses when they go to a casino. Well, it's time to get up. I've had my dinner comped to me by the casino. My room's comped. I'm feeling lucky. Let me get down here. I took $1,000 with me. And then you go home without it because it was time to gamble. I don't think that way. I don't teach my students to think that way. There is a operating time, okay? A time that a market mechanic sits down and says to themselves, probabilities are high right now that there will be a obvious price run after some measure of manipulation or liquidity. And then simply looking for that opposing liquidity and finding in between those two reference points the myriad of PD arrays that I've offered to you as a language where you can just simply go in. Not every PD array is going to exist in every price run. So that's why it's beneficial for you to study like my 2016 mentorship month 4 content. It's on YouTube channel. It's simply this introduction to how you can incorporate a good sampling of my PD arrays, the very simple approaches to saying, okay, I can see this is an area where I can get into the move that's already started because you weren't apt enough, astute enough, or in front of the charts at that time to participate in that move, to get in at that particular price. Now, my school of thought that I try to impose upon you is you don't need the best entry. Now, I illustrate it. My students that have been with me for a while, they can illustrate it consistently. So there's a transfer of knowledge there. But you don't, if you're learning, you don't need to have that perfect entry, that perfect lowest low entry, the turtle soup low or the turtle soup high. You don't need that. I've mentioned, and even when I was teaching the paid mentorship stuff, I said that that is the highest form of trading when you're trading at the highs of a false breakout and getting short right there, because it takes a great deal of conviction. You're out there in open space where there's no safety net. You have to have a strong conviction about this was absolutely fake. And the easiest way to determine that with a consistent that will repeat is only trying to look for those when you're brand new. Look for those types of setups when the market's bearish. And you'll see that those types of ideas, false breakouts or buy side liquidity when the market's bearish, it's easier to take those trades and you'll grow into that over time. The most difficult trades for me as ICT is when the market's primarily bullish and it's in a strong bull market and selling short a false break above buy side liquidity. If I really push the envelope of participation, I will have more losing trades in that environment if I'm using that model. So I don't use that model in those environments. But I do have some tricks up my sleeve, and I just showed them, this week and whatnot, about where I can see the large shift in probabilities in my favor that were near a high. Now, that's not like guessing, okay, the market might go to this level here before you start looking for shorts. That's a guess. That's a guess. There has to be something else besides just simply tossing it out there in the ether. And then if it happens, you cheer yourself, say, look how smart I am. Look at me. And it pales in comparison to what I'm showcasing the last 2 weeks, where every quadrant is nailing the highs and the lows. Just like that, over and over and over again, Daddy. Just like that, over and over and over. Not luck. Oh, no, no, no. Luck has no part in the conversation here. This is technical science. We have left, okay? We have left classical analysis concepts in the past. We have evolved. In the